Good afternoon, you beautiful sons of bitches. We are back on the NLX2 podcast. We have a very unconventional, non-strength and conditioning topic today that I am stoked about, that I think that if you guys can take bits and pieces from, will benefit tremendously. So, as you know, if you've listened to this podcast, let's get through the details first. The Iron Chapel is now in a different leg of its existence, okay? For people that are new, this is a gym that I partnered up with, and we have hit a year of service. We also have been hiring. We have hired two brand new trainers, kick-ass trainers, and Andrea Johnson and Natalie Hall. Stole them from the rec center, and we couldn't be happier. They have put 3 new classes on schedule. They have brought new people in, and we can speak the good word of strength and conditioning and keep changing lives. So today we will be talking a little bit different, but with the Iron Chapel, come stop by, get into a class, hang out with Andrea, hang out with Natalie, me, Daniel, Josh. We have a good thing going here, and it is picking up speed. We're now running into the problem that we do not have enough space, which is a good problem to have, but it's a problem at that. So at Coach_Wortman is my my Instagram, and also the Iron Chapel, at the Iron Chapel. Hold on one second. So what we have going today is something that I wish I could have had, when I started my investing little journey, you could call it. So first and foremost, you have to, in next level training, the Iron Chapel, investing, I was a little lost soul. I was just this little stupid college kid or stupid high school kid, and I had no idea about investing. I still am not a professional at this. But when I was younger, I was really striving to have a male figure, or anybody really, a figure that somebody that can point you in the right direction, somebody that can guide you and help set you up for further life down the road. Well, I didn't have that. And so today we'll kind of go over, how do you get started investing? What is investing for beginners, investing for dummies, investing 101? And we're thinking long-term at this point, but then I'll kind of get into what we've been doing as of late, and impact investing and the impact, pun intended, that they are having, okay? So very excited about what we're doing today. And I really do hope, out of all these podcasts, even if you're not a strength guru, that you can get a bit of information that helps you down the road. So the entire goal of NLX2 podcast is, one, our audience is a lot of strength conditioning coaches, a lot of people in the fitness industry, but there's also a weird population of business owners and a lot of people that own businesses, big or small, that have been listening to the podcast. And so we want to bring the best people in every industry, not just strength and conditioning. We want to bring the best thing to strength and conditioning coaches. So what I mean by that is, outside of the realm of strength and conditioning, in investing, we want to bring people like Dylan Friedrich that do it for a living to you, the strength coach. Because strength and conditioning is this stupid standard behind it, that you need to work from 4 a.m. till 7 p.m. You need to be away from your family. You need to sacrifice, and you need to go to bed so tired that you don't want to wake up in the morning. And to some extent, some people need to do that. Some people need to work through that. However, it doesn't have to be like that. So we want to bring you the best of investing, the best of business, the best of health, and bring that to you, the strength coach, you, the business owner. So we will do that today. So first, kind of giving you where we're going to go with this. I had this all planned out in my head, and it's pretty good. So first, I am not a financial advisor. I'm far from it. I teach people how to move big weight, and I throw my money in investments, okay? Just to put that out there. I'm not a professional. Secondly, this is my opinion, and this is exactly what I do, okay? Take that for what it is. I've learned from people way smarter than myself, and I've been able to take their knowledge and learn from them and then make my own decisions. So I'm not a professional, but I'm also not a dumbass. So take it for what it is. Also, we will go over when to start investing, how to start investing, where to invest and things that you can take along, different options that you can put money into, recommendations along the way, and exactly what I do. I'm going to give you my exact long-term portfolio, what I do, and why I do it, most importantly. So this gets us to the question of where to start. Where do we start with all this investing stuff? And there's so much jargon out there. There's so much banter that it's hard to weed through the bullshit. And so hopefully I can be that person that you need starting young. When I say young, I'm saying high school. I'm saying college. I'm saying post-college. Even if you're 30 or 40, you still have time. So I want you to put yourself in your life cycle. Where are you at today? And where do you want to be in 10 years is what you want to look for. So first and foremost, where to start. Every single investor, every single person that is in the finance world, the finance industry, in hedge funds, in whatever it is, big banking, they will always, there's every single person in the world that's ever invested say they wish they would have started earlier, one, or they wish they would have put more money on X, Y, or Z. So if you, the person not investing right now, knows that, take advantage. Start now. Start today. I'm going to be giving you some tools that you can use today with zero overhead, meaning you don't have to have any money. Zero overhead to start investing today. It may be minimal, but it's better than nothing. So my brief story, and at the end I'll kind of go over the entirety of it in detail of exactly what I've done. So started over 2 years ago. I was about 23, 24 years old. I wish I started earlier, but I was a broke college kid and addicted to pain meds. So, well, not 2 years ago. It's been 5 years, but I just didn't, at that time in high school, in early college, freshman year, I didn't have that mentality. And so I didn't, there was nothing more important. So started with $2,000 in an index fund. And I'll go into what index funds are here later, but started with the $2,000 in an index fund. I sat and holded it, and I had no idea what I was doing. I didn't know if I was going to get that $2,000 back. I didn't know if I did it right. I didn't know if I had the right brokerage. I just threw it. So that's where I started, was with the $2,000 in that. Then February of 2020, this is kind of funny. It is now February 11th of 2021. So February of 2020 is when we started seeing all these Corona beer memes saying, I ain't scared of coronavirus, or I've drank 10 of these at South Padre Island. There was a lot of stuff going on. And if you think about it, it's crazy. It's been over a year since the first case of COVID in North Dakota or in anywhere. So that's pretty crazy. But anyways, February 2020, I put $5,000 into Tesla. And I want to tell you, like, $5,000 seems like a decent amount of change. At that time, this is when COVID hit. This is March now. COVID hit. I was a 26-year-old with partners owning a gym. Very weird time to own a gym. You go from having a positive P&L statement every single month, paying everybody that we needed to pay, to zero income. So this is where things got a little Western. Things got a little shaky. However, I looked at my wife, and thank God for her. Seriously, thank God for her in many different aspects. But she's an RN. She's an OB delivery nurse. So she still had a job. People were still popping out babies at crazy rates. So what we did is we kind of looked at, okay, let's figure 3 months. Let's just say safely 3 months without any income on my side. What can we put into the stock market? What can we do without right now so that we can put it in there? Because everybody was freaking out. Well, the stock market's down. We're going into a recession. We're doing all these things. Stocks always go up and they always go down. They're going to come back and they're going to go back down. So we set aside $5,000 and I put it into Tesla. This is before their split. Okay. So they did a 4-to-1 split, I believe. Before their split, meaning they cut all their shares in a quarter, giving them more shares. So I put $5,000 with an average buy of about $300 to $315. They're now at almost $900. And so that has helped a ton, but that's a long-term shot. So it was index fund. Then I opened a Roth IRA in 2018. And so I want to go over a little bit of what that is. And a Roth IRA is an IRA, a savings, that you pay the taxes right now as you put it in, instead of paying taxes when you take it out. So this is a very important thing to think about here. Right now, we've gone through COVID. We are actually, according to my financial advisors, we are actually in the best tax bracketing that we could be in that we've ever been in. The lowest amount of taxing, which sounds crazy, but yes, we are in the lowest amount of taxing that we could be in. With COVID, a lot of things were taken away, especially our reserves. All this money's being printed. So this money has to be put back somehow, and that is to tax your taxpayers stiffer. We're going to have higher taxes. So opening a Roth IRA is something that could help right now because you're going to be paying less taxes now than you will be when you take it out, because there's no guarantee what kind of tax bracket we're going to be in when you do take it out. So opening a Roth compared to a traditional is more than likely more advantageous right now, but it's dependent on your situation. So then in March 2020, I invested about $4,000 in cryptocurrency. And I'll get into the exact of cryptocurrencies, what it is, and all that later. Then the most impactful thing that I did was I joined Impact Investing Team. This is a company created by Dylan Friedrich. He graduated with my wife from Dickinson, and he had been day trading for 5 to 7 years, somewhere around there, and has done it very, very successfully. He was at a very good job selling insurance, very comfortable, but it wasn't what he liked. And he said, screw it all for something that he was passionate about. There was ups and downs of that story. However, what brought us to today is Impact Investing Team and what he's creating our playbook, our strategies, our psychology, and everything you need to be successful in the day trading realm. And I'll get to that later. So this gets us to the bulk of what we're talking about. Where do you start investing if you have little money, or if you have a lot of money? Where do you start? If you don't know what you're doing, where do you start? And everybody in the finance world knows what Warren Buffett, his quote, "If you do not find a way to make money while you sleep, you will work until you die." And it doesn't ring very true until you really dive into compound interest. You dive into investing, real estate, bonds, stocks, whatever you do. You really find out the power, the magic of investing. So there's a principle in finance that I've run across, and I think it rings true. You have to pay yourself first. So this is number one. Starting investing by paying yourself first. And what this means, you need to prioritize savings. However, not at the expense of necessary things or necessary expenses. So what does this mean? This means that yes, you can put money away, but however, you need to take care of the essential expenses: mortgage, food, vehicle, utilities, all these things that are essential. So what you have to do is establish expenses versus income. You need to find out how much disposable income do you have at the end of the month so that you can take some of that and start putting it into investing. This is simple. Just figure that out. Look at your bank statement for 1 month. Find that out. Get your numbers, and you should know that off the top of your head. This is something that's very, very important. So number two, you need to establish an emergency fund. And this is a Dave Ramsey principle that I'll get to with another one too, but establish an emergency fund. So now you've found your expenses. You found how much money that you spend a month and how much money you have over the top. So with however much money you take in essential expenses, times that by 3 to 6. So you can have 3 to 6 months of an emergency fund. This will help you. This will help you with having a nest egg when COVID hits again. So this is something that you have to do before investing. And so number 3, take care of debt first. And this is, I agree and disagree with this at some extent. So some people that have $60,000 in credit card debt and they have just completely dug themselves a hole, they need to probably get that going and address that. However, you don't have to write off all your debt and get all your debt gone before you start investing, but you really want to get rid of that as fast as possible. So I'm going to ride the line on that. You don't have to get rid of debt, but you want to take control and put everything you can into that so that you can maximize your potential growth, maximize your returns as you start investing. And this is what you can do. This is a principle. If you've ever heard of Dave Ramsey and his Total Money Makeover, he's done great things. He's made it very simple. So say you have a loan for $1,000, you have one for $10,000, and you have one for $100,000. Okay, so that $1,000 loan is a $100 payment. So you pay that off. You start at your lowest payment. You pay that off. It's now paid off. Now you do not have an extra $100 to spend a month because you don't have to make that payment. You now rolled over to your $10,000 loan. That's $500 a month. So now you pay $600 instead of $500 on that. Okay, you pay that off. Now you have $600 extra dollars that you're not spending on loans. Well, you're going to throw that at your $100,000 loan that has an $1,000. So now you have $1,600 to pay towards that loan, knocking it out really, really fast. So you start with your smallest, you get to your biggest, and you're done. This is a principle, the snowball principle that Dave Ramsey has established. So what you need to do first and foremost, so now we're getting into your different types of strategies and what you could do. First and foremost, you have to invest in yourself. You have to invest in your mentality, your knowledge, your time, and your family. Meaning, you have to find continued education of how to do this. If that's listening to a podcast, awesome. If that's taking notes while you're listening to this podcast, do it. If that is taking courses, getting into Discord groups, learning from people that are successful in the sector, that is what you need to do. You need to first invest in yourself. After that, we can talk about the investing. So now, how do you decide where to invest in? This is the golden question that I get all the time. And there's so many things you can invest in. You can invest in stocks. You can invest in real estate. You can get into loaning, depending if you have a lot of capital that you can get away with. Bonds. You can do so many different things. And there's so many things within each of those, even real estate, that you can start with a very small amount of money. So you have to decide what you want to invest in. I chose stocks for a good reason. Hear me out here. Stocks are very low maintenance. If a market crashes, it's very, very easy to liquidate all your assets, meaning turn those to cash, get out. If you have real estate and you're in 2008 and the housing market crashes, it's very hard to liquidate and get rid of your asset. So that you're playing devil's advocate there. Both ways can be bad and both ways can be good, but I chose it because it's low maintenance. I have a full-time job and I didn't have the time to buy real estate and get into real estate right at that time. So I chose stocks. Either or. It's whatever you would like. So I invest in long-term. We're thinking long-term at this point to help guide you this way, in stocks and cryptocurrencies. So stocks, the traditional stock market, and cryptocurrency, no, cryptocurrencies are not the black market. I'm not buying black tar heroin from a 16-year-old in China. This is an established market that people make a lot of money and lose a lot of money in, just like the stock market. So here we go. We'll get into the specifics now. Think long-term. You have to think long-term at the start because day and swing trading takes way too much brain capital right off the bat. You want to think long-term right off the bat, get this set up, and then you can progress further. So the lowest barrier of entry, I told you that I could show you guys something that doesn't take much money off the top, and I'll get to that. But the lowest barrier of entry to getting into investing is getting into index funds when we're talking stocks, okay? So if you're going to get into investing and you want to just get money into the market and let it start growing, index funds are a way to do that. Index funds look at minimal risk and they look at market average returns. So a lot of people usually say, well, market average is 8. Well, last year we were closer to 15 or 20. So you have to, you're looking at market average returns, not exponentially crazy returns on your money. Can that happen? It can be more than 8%, and it usually is. However, this isn't going to be that home run thing that you're looking for. So what is an index fund? An index fund mitigates risk. It's looking at either sectors or top companies. So one of the most bought is the S&P 500. So you're looking at the top 500 companies in the United States interchangeably as they progress. So a lot of these companies, Apple, Facebook, Tesla, a lot of these companies are in there that are the top 500 companies, and now you own a very, very small portion of each of those. So when you get into index funds, it's a mitigated risk because you're looking at the average of all these companies. So say Facebook goes to zero, it tanks. Nobody likes Zuckerberg anyways. If it goes to zero, you're not losing all your money. But if you invested in Facebook and it goes to zero, you lose all your money. So this is where risk mitigation comes into with index funds. You're looking at market average, 8 to 15% year by year. And so this is something that's a safe, low barrier of entry and low risk to get into. So that's a good start. What we want to get to, though, is you can put your large lump sum in, and this is all dependent on your situation, guys. So don't take this as black or white. But you put your lump sum in, and then you find out that you have, say, $500 of disposable income at the end of the month that you could actually start investing with. So you could get into what's called dollar cost averaging. Dollar cost averaging allows you to hit the highs and the lows of the market, putting it in each month and allowing you to level out or average out your investments. So sometimes you may get the low of the market, which is good. So you're getting the stock at a discount. Or you could get the high of the market. And this is not a bad thing per se, but you're paying more per stock. So this is something you can think about. Put your $5,000, $1,000, whatever it is, and then dollar cost average. Hey, I can put $100 in. $100 is way better than zero. So that's a good place to start. And then we get into the ACORNS app. And the ACORNS app is a very simple tool, but it's very effective. And you don't have to start out with a large lump sum of money. You can just put it in and be done with it. So you download the ACORNS app, and what this does, if you haven't heard of it, you connect your banking account, and from there, say you buy a pack of gum for $1.50, okay? So you buy that pack of gum, it will invest. It's going to round up from $1.50 to $2, and it's going to invest that 50 cents into your investment fund, which in turn invests in index funds, mutual funds. So this is something that is very, very low risk and very, very non-capital intensive. You don't have to have a ton of capital. You don't have a ton of money to put in. And so you can start today. And like I said, every financial advisor, every financial guru says they wish they would have started earlier. So start today. Just do it. What I'm going to do for you guys, I'm going to post up my link to get you guys started on ACORNS. It's a huge, massive app, millions of users. But if you sign up with the link that I provide in the YouTube channel, in the Instagram channel, in my Instagram DM, my Instagram link in bio, click on that. You get a free $5 invested right away, and then I get a free $5 invested as well. So think about that. That's something that you can do today with zero money. All you have to do is have a personal checking account that you use. It can't be a business account because that's pre-tax dollars, and it can't be a savings account. So make sure you just have a checking account and you can get signed up. I'll send you guys the link. If you're interested in it, just DM me if you can't find the link, and I'll send it to you. So now we get into more sector specific or individual stocks per se, or individual businesses. So this is where things get a little bit tricky. Okay, I alluded to it when we talked about index funds, but when you invest in individual businesses, individual stocks, now the risk does go up. The risk of going down goes up, okay, because they are a lot more volatile. They're going to be going up and down a lot more than the index funds are. However, the reward also goes up as well. So you're not looking at market average returns, because in the S&P 500, if one company gets great news and they have a merger with Amazon, that's not going to skyrocket the index fund, but that is going to skyrocket the business's fund. Okay, that's going to skyrocket that business's stock. So this is where risk goes up, but reward exponentially goes up, and you can start getting into individual businesses or actually sectors of businesses. And so what you want to think about is you have to do your research. And I did not invest, other than Tesla, I did not invest in any stocks or anything before I learned from impact investing. Once I got on the team, then I was very comfortable and was able to start putting money away and learning first. But you must do your research. jumping into companies because it's a cheap stock can lose you a lot of money quick, okay? So you don't want to invest just because of news. That's rule one. Just because there's good news on a company doesn't mean you have to invest in them right away. There should be other indicators. So you want to look at their financials. You want to look at their chart patterning. You want to look at news. That is a piece of the puzzle. But you do not want to just do that on news because there is a risk that you lose your money. So you want to wait. And a big thing, putting in layman's terms, very simple, is you want to wait for pullbacks or consolidation on the stock. You don't want to buy it when it's at its peak. Make sure you're waiting for a little pullback, little consolidation. Think of it as you go to the store and you buy a bag of oranges. Well, they're on sale. So this stock is on sale. It's cheaper than what it was a week ago. So that's pretty simple terms in layman's terms there for you. So right now, if we look at the stock market in 2020, in 2021, hot sectors right now are electric vehicles and marijuana, battery companies, battery charging companies, and e-commerce are huge. Obviously, online software, social media companies are big as well. Apple's big. But these industries that are completely going off these days is EV, electric vehicle, marijuana, charging companies, battery companies, and a lot of energy companies outside of oil and gas. A lot of these are really making runs this year as we have a new president in. And it's good for the stock market. And so these are sectors that you want to pay attention to. Doesn't mean you want to jump into them right now, but you want to pay attention to them. And this is very simple. If you want to start looking at companies, you open a brokerage. You have TD Ameritrade, you have Robinhood, you have Webull, you have all these things that you can open up very simply and start putting money into. Robinhood has caught a lot of flack from this Wall Street bet stuff that's going on. And so I know Webull has gained some traction as of late. But this gets us into my portfolio, what I do specific, okay? I'll tell you exactly what I do and why I do it, and hopefully you guys can take something from that. So as I alluded to, I had an index fund, $2,000 into an index fund right off the bat. That is sitting. I haven't touched it. It's just sitting there growing, okay? Obviously, there's pullbacks. There's ups and downs. Dave Portnoy says stocks only go up. Well, I wish that was a perfect world. However, they do go up and down. So I started off with that. I've had my ACORNS app for about 4 years now, and the ACORNS app has grown. I want to say it's just a smidgen under $2,000, and that's just $2,000 of spare change that I have put in there without me even knowing it. So I look at my bank statement on my personal card. Everything is in nice, even numbers. It's awesome. So if it's $1.49, it puts 51 cents in there. And so it's nice when you don't even know that money's gone and it's invested right away for you. Then looking at a kind of a more long-term portfolio viewpoint, I told you that I got into Tesla early on. So I got into Tesla very early on, and here's why. I believe in what Elon Musk is doing. Everything he touches turns to gold. He has done amazing things in every sector that he's been in. And so Elon Musk has a really cool perspective on what he's doing. So Tesla is his company to try to end up saving the world or minimizing our footprint we have on this earth. SpaceX is when we have completely destroyed our earth that we can get to Mars safely and get back if we needed to. Then his boring company, he's just making flamethrowers and tunnels under LA, which is badass as well. But everything he touches turns to gold. So I believed in his company. I believe in Tesla and what they're doing. And so I put a lot of money in when they were very, very low when the stock market crashed in March of 2020. So people think, we're going into a recession, the stock market's failing, it's crashing. Well, that's time for opportunity. It sucks when you have stuff in the stock market, when it does that, when it corrects, when it crashes. But it's a time for opportunity because everything's on sale. Think of it as everything is on sale. So I have a long-term holding in Tesla. I have a long-term holding in Drive, D-R-I-V, and I have long-term holding in NIO. NIO is think of it as the Chinese equivalent of Tesla. It's very simple. But I also have, what I was talking about is holdings in XRP and Bitcoin, which are cryptocurrencies. These cryptocurrencies, if you would have looked 10 years ago, people thought this was like the velvet road, this underground market, and it was for a while. People were doing some shady stuff with it. However, this is a very established market now. Many, many centralized banks have invested in them. Many retail investors invested in them, millions. And XRP and Bitcoin are two companies, two of the main companies. I mean, if you look at the top 5 cryptocurrency coins, XRP and Bitcoin are up there, Bitcoin being number 1, XRP being 4 or 5. So I'll kind of go over that for you and kind of give you a brief overview of what that is and what that does. So XRP is the actual coin of the company Ripple. Ripple has established XRP, and the whole foundation of XRP and Ripple is pretty cool. And it's going to change how we think of banking today. So XRP originated, and it is known as the best digital asset for global payments. And maybe that doesn't seem like a big deal because you're not dealing with global payments. You're not having to transfer money from one currency to the other. But all instant transfers globally in under 3 seconds. So what does this mean? Right now, if you had to pay somebody in US dollars and you had to get it to pounds, there is a copious process of centralized banks having to put their stamp of approval on there to say this is an approved transaction, this can take place, but this is going to take anywhere from 3 days to 2 weeks. Okay, this takes a very long time to happen. And so these global processing payments are very, very hard to do. XRP is looking to solve that problem. So, with global companies, so say you have a global marketing company. This global marketing company has freelance marketers all over the world, so they make videos, okay? Well, these video creators are all over the world. We have Venezuela, we're in Italy, we're in Germany, we're in the United States, we're everywhere. So all these places have different currencies, but if this market is in the United States and the CEO lives in the United States and it's based in the United States, we're going to be using US dollars. So somebody that gets paid, say, $100 a week, very, very minimal in a third world country, can't wait 2 weeks to get their money. They need their money. They need to feed their family. They need to do the things that they need to do. So XRP is actually connecting global economies through one central, or not, it's not centralized, but one token. So you're paying these people in pounds. So XRP takes out all the middlemen. It verifies everything on blockchain. And so you can now pay in USD, XRP transfers that into pounds, and that person is paid instantly. Not days, not minutes, not hours. Instantly. That person is paid. And so this can completely change the global market, can completely change global business as it pertains to people doing business outside of the United States and inside the United States. It completely changes everything. So this allows for no centralized banks to have to give their stamp of approval to say, hey, this is a good transaction, the money's there. Everything is instantaneous. And so I want to show you how revolutionary this is. And so you've probably heard of Bitcoin. Bitcoin is the most popular coin in the cryptocurrency world. Bitcoin's transactions can take up to 60 minutes to verify. Much faster than centralized banks, but much, much slower than most. Litecoin, ticker LTC, can take up to 10 minutes to actually authorize the transaction, say this is valid, and convert. Ethereum, ticker ETH, can take up to 2 minutes. Now we're getting down there, okay? Ethereum can take it downwards of 2 minutes or upwards of 2 minutes, and that is a verified transaction. Then you look at XRP. This is why XRP is the foundational best digital asset for global payments. This is why so many people have bought XRP. This is why XRP is going through the roof right now. And this is why XRP could be the most revolutionary coin in the cryptocurrency world. For XRP to have a validated, authorized transaction, it takes 0.0 seconds. Hear me out. 0.0 seconds. That's damn near instantaneous. That's as close as it gets to instantaneous. That amount of time, we don't even realize it. So this is where XRP is a huge leader in global payments, and they are going to change the entire landscape of how business is done outside of the U.S. and inside the U.S. and how they intertwine. This is huge. And so this is why Elon Musk last week put $1.6 billion into Bitcoin. This made all the cryptocurrencies go through the roof because everybody's like, oh, Elon Musk does it. It turns to gold. Let's do it. So he has put all this money in there, and it has flooded the markets now. And so XRP is upwards of 53. Let me get the exact number for you right now at February 11th at 6:30. The price is 52 cents per coin. So this has been on a bull run for a long time. So I would expect, I don't think XRP is going to see any of the 30s anymore. It possibly could on a decent pullback, but I would say anywhere from 35 to 40 is a decent buying point because this is going to grow like crazy. It's right now Ripple, the company that made XRP, is in a lawsuit with the SEC. However, every other country has accepted XRP as a currency, not as anything else, not a security. It's a currency that they have accepted. And so the U.S. is trying to put a kibosh on that. The SEC is really trying to put a kibosh on it. But everything that you read shows that Ripple should come out of this on the other end and should benefit from this. And so it would be good to get into it before that happens. A lot of people are saying November at the earliest is this when they're going to come to a consensus, but nobody knows. So this is why I believe, and I think that some people should look into XRP as it has the foundation to be a skyscraper, to be a monumental coin in the cryptocurrency world, and take over global payments and international or local payments. This is instantaneous and it's huge. So that is my long-term portfolio. I'll go over it one more time. So index fund, ACORNS app. My long-term investments would be Tesla, DRIV for Drive. It's an index fund for electric vehicles. Has some like the biggest ones, Plug, Neo, Blink, Tesla, a lot of these big companies in it. And then I have also Neo shares. So then lastly, to round that out is XRP and Bitcoin. I have a decent amount of change into both XRP and Bitcoin, XRP being a lot more. I think at this moment, like 10 or 12,000 coins. So I want you guys to kind of digest what I'm saying here. Digest all this. So you need to know what your expenses are. You need to have a 3 to 6 month worth of expenses emergency fund. And then you have to decide, do you want to go stocks? Do you want to go real estate? What do you want to get into? And lowest barrier entry would be index funds. You can use the ACORNS app today. I will post that up for you. Click on the link, get signed up. Or you can get into actual stock market and individual businesses. And this is where I wanted to round this out. And so we talked everything about long-term today. So everything was long-term investments. You throw it in there and you just sit. Well, you want to think about, if you ever want to think about day trading or swing trading, I want you to realize that there's a lot of brain capital that comes behind it. There's a lot of time. There's a lot of frustration. And this is something that if you have the time to do it and you're willing to do it, awesome. I think it can change your life. But I want to give you a little story. I joined Impact Investing a little bit right at a year ago. And I didn't know my ass from my face when it came to investing, man. I had no idea what risk per trade was. I had no idea what candles were, wedges, pre-market high confirmations, all this jargon that I had no idea about. And Dylan has done an amazing job of making it digestible, giving you an academy, and allowing you to take fate in your own hands. Take your life by the reins and go. And so Impact Investing is a investing team. We have a large group of people, but I would say about 10 to 15 people are active on it every day. This is something that has changed my whole life, completely changed my whole life. I wake up every morning. I am ecstatic. I am ready to rock. I'm checking my phone, looking at the companies, looking at whatever I need to look at, my swing trades, my day trades. I'm excited in the morning. It's something that I look forward to every single day. I set my watch list. I do my homework and make sure that I can put myself in the best situation possible. Day trading, swing trading is not all rainbows and roses. There is loss. You will lose money to some extent, but overall, this can change your life in the long-term run or the short-term, it's to some extent. And so we have about 10 to 15 people that are on there that are active every day, and it's a group of people. You get to be a part of a group of people that want to better themselves, are interested in your success, you interested in theirs, and you can bank ideas. You can be with these people and truly learn from the best in the business. When I don't say this lightly. Dylan Friedrich is a genius at what he does, and he would tell you he's at the bottom of the barrel when it comes to large-term investing. But he's a very honest and conservative guy that he is very, very good at what he does, and he's brought up 10 to 15 of us and many, many others and really changed their lives, allowed us to take control of our lives and move forward with what we want to do. And so if you've ever thought about day trading, if you've ever thought about swing trading, if you've ever thought about that stuff, don't just do it on your own. Learn from somebody that's been successful in the sector, and I would not recommend anybody else rather than Dylan, an impact investing team. Reason being, I've been a part of other Discord apps and groups that had 10,000, 50,000, 100,000 people in them, okay? If you have questions, do you think that you're going to be able to jump on a Zoom call within the next 24 hours with the owner of that 100,000 people group? Good freaking luck. It's not going to happen. They are there to take your money, give you the bare minimum, and hopefully you make a little bit of money, but more than likely you're going to lose some. And so how impact investing works is you get on, you talk to me, we can get you going on the impact investing, and he has an entire academy that allows you to learn every single thing you need to do to be successful. Long-term, short-term, swing trades, option plays, day trades, whatever it is, when it comes down to the psychology or the patterning or the strategies of actually trading the stock market, he has this all set up for you. And so I challenge you, I really do. Every single year from 2017 till 2021 and for the rest of my life, I committed to myself to learning one new skill a year. And you said, well, damn, that's pretty conservative. You're really shooting for the moon there, Wart. Hear me out. These are skills that could take up to a year to even master or just get the fundamentals of. In 2020, that was impact investing. That was day trading. That was swing trading. In 2021, I've committed myself to really dive into jiu-jitsu. I want to get back on the mats. I miss rolling around. I miss wrestling, and actually learn how to take really shitty situations into my own hands. Okay? So what I'm saying here is with impact investing, it's going to take a lot of time. You have to commit a lot of time to be successful in this world. It is a very, very crazy world in finance. However, if you can learn from somebody that's been successful, you have a fighting chance to get successful and have a great, great life, financially speaking. So I would highly recommend it. So I challenge you to extend a hand out, ask a question, DM me. I can get you started, or I can point you in the right direction. We can get you started and hopefully change your life, because it's completely changed mine and it's completely changed everybody's in this account that we're on. And so I do challenge you. If you've ever thought about it, reach out to me, ask a question, shoot me a DM. I would love to get you started, and we can kind of get you rolling from there. Dylan is a great dude, and if you have any questions, you're on a Zoom call with the owner of the company right then. Or if you're in Dickinson, you go hang out with him and he answers your questions. It doesn't get any more homegrown roots than that. So I challenge you to reach out, ask me questions. We can reach out, we can get you set up, and it would be great to have you on there. If not, take some of this advice and run with it. So look into index funds, look into ACORNS app right now, today. Look into a lot of these things that can help change your life instead of working till you're dead. Find a way to make money while you sleep. So I hope you guys enjoyed this. I hope you guys can take something from this. If that's like, hey, I'm going to start looking in the crypto world. Awesome. Hey, this is, I want to start looking into day and swing trading. Sweet. Reach out a hand. We will help you. If this is, I'm going to just get the ACORNS app and that's it. That's all I can do right now. That's so much better than nothing, people. I promise you. I promise you. So I will close with this. I am not a financial advisor. I'm a dumbass strength coach. I just happen to stumble upon something that I'm very passionate about and that I can hopefully help others and get you guys a part of a group that is much smarter than myself that has done some really cool things. So I wanna extend that hand, and I hope you guys reach out and ask for help. Any questions are encouraged. And so what I ask you to do now is, if you get a chance, could please leave a review on iTunes for the NLX2 podcast. We're racking up some reviews, and people are liking it, and I hope that you guys can take some bits and pieces from this. I really do hope. So you guys, we will chat with you guys next week. Have a great one. Reach out a hand. We'll see you on YouTube. You can look at this ugly-ass face, and we can see you guys next week. But check out NLX2 Podcast, Spotify, iTunes, YouTube. Peace, ladies and gents.